Something a little bit different tonight. I haven't done a Tuesday midweek video for a while, a little bit earlier than normal, but I thought when I was going through the watch list scans tonight, that the vast majority of the results that I was getting were to do with the gold mining group. So I thought it would be interesting to do a little group focus video. I haven't done one for a little bit since I think it was the last time was back in this area here around the 10th to 13th of March area when we were in the backup zone following the stage 2 breakout. So as it's getting to an interesting point again with the market starting to pull back today a little bit, and the dollar index also at its 30-week moving average, I thought it'd be interesting to do a little group focus video on gold, silver, and the precious metals miners again. Follow up, as I like to obviously track the groups when they're moving through stage 2 at some of any potential key milestone areas. So at the moment, if we have a look at the GLD chart of this is one I've got marked up. Obviously you can use the spot chart. If we go to in the futures chart here, particularly, we've just dropped underneath the 2000 level recently. But you can see the last few weeks got these little demand tails holding on here as it tests that recent, obviously, pivot high from back in January time. So at the moment, the SATA score on this, which is our stage analysis technical attribute score, has dropped down to a 5. So it's in a very neutral position at the moment. 5 is obviously completely neutral in the mid-range. So within obviously a normal stage 2 advance with the SATA score, it tends to move above the 7, gets up to around the 10 most of the time. Obviously, we haven't had a 10 yet on the gold futures, but then drops back down into the mid-range every so often throughout the stage 2 advance at the moment on obviously a more significant pullback. So at the moment we're in that mid-range with this. So one of the reasons I wanted to talk about gold today is that the dollar index has also got itself to an interesting point again where it could potentially pivot once more. So gold and silver have fairly inverse relationship with the dollar index. So I actually flick to an inverse chart of this. So this is the GLD against the US dollar. So with a 20-day correlation and a 200-day correlation. So when it's got a correlation of 1, it's when it's a completely positive correlation, when they're completely in line with it. When it's a 0, there's no correlation. When it's a -1, there's a negative correlation, so it moves inversely. So you can see at the moment, gold and US dollar has got a correlation as minus 0.93 at the moment. So it's completely inverse at the moment. And this is a 15-year plus chart here. So you can see for the vast majority of the time, it has a negative correlation with the dollar index, and a lot of that time it's below minus 0.5. So it's very, very inversely correlated with the US dollar index gold is. And you can see there's obviously occasional moves when it moves out of that. But if we flick to gold versus silver, for example, you can see there's a much different correlation here. We have a much stronger, so 0.77 on a 20-day basis and 0.87 on a 200-day basis at the moment. You can see the vast majority of the time, obviously this bulk of that action is above the 0.5, so complete opposite to what we saw the US dollar. Obviously at the other end of the scale we were down here. So we'll flick back one, go back one, no. Oh, going the wrong way. You can see we're at the other end of the scale. So silver compared to gold is very, very correlated and tracks gold very, very closely. It tends to lag. Gold tends to move earlier than silver. Silver is the more leveraged way to thus play gold, and then the miners are more leveraged ways to play gold and silver. So, but generally when the US dollar is moving and gets to a key pivot point, gold is also normally at a key pivot point, but in the opposite direction. So you can see here with the dollar index, we're now just coming into that declining 30-week moving average. This is in stage 4 at the moment. So it broke down into stage 4 back in November, late November there. So the original stage 2 breakout was back here on the 27th of September week back in 2021. So we had really strong stage 2 advance, which in turn gold had a really weak period during that time where it was breaking down in stage 4. Now we've moved out with gold into stage 2. So your stage 2 breakout back here, we're moving strongly higher in stage 2, grinding a bit over the last few months here, but you can see the dollar index, as I said, just coming into that declining 30-week moving average. And if we drop down to a daily chart, we've had some local spring type action recently, which I've highlighted on Twitter at the time, and test areas, so a few little tests of that, and then started to break out again highlighted that at the time as it was starting to move through its 50-day moving average, and it's been grinding up, but it's now coming up. Go back to the weekly chart on this, as I said, coming up to that declining 30-week moving average. So in turn, if we go back to gold on the GLD chart here, you can see it's coming into an area of potential support at the same time. So looking for this to attempt to rebound with the same as the dollar index chart there to start to pull back down again within the range. As if this does start to break above here, would then start to turn this into potential early stage 1A. What happens a lot of the time at early stage 1A is you then get a reversal anyway. It tends to have a week or two above the 30-week moving average before reversing back below it to obviously test and start to develop some kind of base structure. So if it does start to push through there, then obviously gold might have a little bit more to go. But looking for this to make a form of base in this area, start to potentially turn itself back around again at this point and continue its stage 2 advance, which obviously has been very good so far. Strong stage 2 advance, been grinding its way higher, doing what it normally does in terms of its character. If you look at past stage 2 advances, for example, it does come in to test that 30-week moving average multiple times. Only the strongest stage 2 moves stay above their 10-week moving average, 50-day moving average for the entire time. Most stocks, ETFs, etc., tend to have moves below that moving average. And this is our second move within the stage 2 advance below the 10-week moving average. So looking for this to start to rebound, get back above the 10-week moving average, 50-day moving average, and start to potentially push back up higher in stage 2 and potentially toss the top of the range here. Again, if we get back, we look at silver, you can see doing very similar. As I said, got a strong correlation. What did we say? 7 at the moment, 0.77 and 0.87 on a 200-day basis. So you can account for 3/4 of the daily moves can be accounted for by what's going on in gold with that. So you can see at the moment a little bit weaker than gold in terms of its undercut this pivot high level here. Similarly to what we saw at the stage 2 move, gold didn't start to come heavily underneath this area, but silver undercut it dramatically. And again, we've undercut with silver, but if gold does start to turn around and hold its area through there, then silver potentially will start to rebound around its 30-week moving average here. We could potentially make a continuation move then in stage 2. So